Hello guys, I hope your 1.5 days are going smooth. Don't take any tension, just keep doing as much as possible. Just keep reading, just keep flipping your pages. Your exam will go very well, okay? Now I am here with some last minute reminders for you. This PDF which you're seeing on my screen over here, you will be able to download this from my Telegram channel. So it's up to you whether you want to straight away go there and read from the PDF, or you can watch this video with me and finish it with me, okay? I'll also put proper timestamps so that in case you are doing this PDF on your own and if you have a doubt in one particular point, it's easy for you to track from the video, okay? So I'll straight away start discussing some last minute reminders, guys. So this PDF, this video will contain the important limits that you have to remember. I know this is the most dreadful part of law for you. So what I've done is I've carefully selected 7 important limits, okay, 8 important limits, we'll discuss them. Then some places where ordinary resolutions and special resolutions are required, I've carefully selected those places where we will tend to make some silly mistakes, okay. So I've targeted and picked those places. Then registers, in some cases you have to preserve registers forever. In some cases you have to preserve registers for 8 years. So we'll discuss that, some important dates, and oh yes, punishments. See, if you're not able to remember the punishments, do not take any tension, do not worry at all, do not take that stress of learning punishments, because see, first of all, the chances of them asking punishment is less, okay? And even if they do ask, how many marks are at stake? 2 marks are at stake, that's all, guys. So for those 2 marks, don't unnecessarily take tension, it's okay. Do the rest of the syllabus properly, punishments will automatically get taken care of on its own, okay? But still, I have brought over here some 6 to 7 punishments. This much at least you ensure that you learn properly and you go, okay? Then some time limits. Now I have selected and I have brought over here just some specific important time limits, wherein number 1, they are important from exam point of view, and number 2, we will tend to get confused between them. So there are some time limits which I will be discussing with you. Then what are the places where the shares should be fully paid up? This condition is there in 4 places in your syllabus. And then oh yes, these interest rates, somewhere 12%, somewhere 15%, somewhere 18%, we'll discuss this also, and then some fractions. So I'll quickly enter into the points one by one. I'll straight away start off with the limits. See, first of all, talking about small company. Now, a small company is a company a paid up share capital of which does not exceed 4 crores and turnover does not exceed 40 crores. Paid up share capital 4 crores, turnover 40 crores. Repeat with me, learn with me, you will not be learning all this ever again, okay? So come on. So paid up share capital up to 4 crores and turnover up to 40 crores, okay? But there are 4 companies which, even if they fulfill this criteria, they will still not be considered as small companies, guys. Public companies, Section 8 companies, holding and subsidiary companies, and statutory corporations. Even if they fulfill this criteria, they will not be considered as small company. Okay, so whenever you get a question in the examination asking you to identify whether it is a small company or not, remember to look at the name of the company. If the name of the company is A Limited, it becomes a public company. So don't even waste time in checking all this. Immediately conclude it is not a small company. Okay, so small company, paid up share capital up to 4 crores and turnover up to 40 crores. Okay. Now listen, if you're a small company, cash flow statement you don't have to prepare. If you're a small company, your securities need not necessarily be in demat form. It can be in demat form also, it can be in physical form also, no problem. If you're a small company, you also have to prepare annual return, but your annual return will be abridged form. Summarized form of annual return will be applicable for you. If you're a small company, here also board report has to be prepared, but the board report also, like annual return, will be abridged form, will be summarized form. In small companies, the term of auditors concept, you have no 5 years, then cooling period of 5 years, individual can be appointed for 1 term, firm can be appointed for 2 terms, all that concept is not there in small companies. So in small company, we can keep on reappointing the same auditor itself, no problem. And see, there's a very interesting point about small company, okay, connected to auditors chapter, I'll tell you. See, a person can be an auditor of maximum how many companies? Maximum 20 companies. But this limit of 20 will not include 1% companies, will not include small companies, will not include dormant companies, and will not include those private companies with paid up share capital of less than 100 crores. In other words, a person can be an auditor of any number of these kind of companies. So here you have small companies also. So an auditor can audit any number of small companies, no limit. Okay, so this was about small company. I have discussed the limit with you and some important points. Now listen, coming to my next point, eligible company. This is from the deposits chapter. See, in deposits chapter you must have learned that a company can which company can accept deposits from members. Any company, public, private, doesn't matter. Any company can accept deposits from members. But which company can accept deposits from public? Only public company. But that too, not all public companies, only eligible public companies. Now, what are these eligible public companies? That is what I am talking to you now. So, eligible public companies are those public companies which can accept deposits from the public also. So, these companies are number one, public companies, and number two, their net worth should be at least 100 crores or their turnover should be at least 500 crores. So, eligible public companies, they can accept deposits from members also, they can accept deposits from public also. Other companies can accept only from members, but from public, only eligible public companies only can accept deposits from the public. Now, how much deposits can they accept? If they are accepting from members, they can accept maximum 10% of paid up share capital plus free reserves plus securities premium. If they are accepting from public, they can accept maximum 25% of paid up share capital plus free reserves plus securities premium. But you know, right, that these limits and all will apply if the company is accepting deposits for the period 6 months to 36 months, right? If the company is accepting deposits for short-term requirement, short-term means what? 3 months to 6 months. For this period, if the company is accepting deposits, then the limit is going to be 10% only, 10% of paid up share capital plus free reserves plus securities premium. Okay, so eligible public company is that public company with net worth at least 100 crores or turnover at least 500 crores. And one more thing, this eligible company, if it wants to accept deposits from the public, okay, if it is accepting deposits from the public within section 181C limit, then simple ordinary resolution only is required. But if they are accepting deposits from the public more than section 181C limit, then they require special resolution also. Just giving you a revision of some interconnected points. Then comes my next point, certification of annual return. See here, annual return has to be prepared by every company. Okay, now once the annual return has been prepared, after that the annual return has to be certified by a practicing company secretary. That certification is applicable not for all companies. It's applicable for all listed companies and for other companies with paid up share capital at least 10 crores or turnover at least 50 crores. Okay, now see, this certification has to be done by whom? A practicing CS. Now the CS who is signing the annual return and the CS who is certifying the annual return, they have to be two different company secretaries. The same company secretary cannot sign also, certify also, same company secretary cannot do it. Then there is one penalty also relating to this concept. If the practicing company secretary defaults in this certification, then the practicing company secretary will be punished with a fine of 2 lakh rupees. Okay. Then see, your next point is from your accounts of companies chapter. Every company has to file financial statements with ROC. Every company has to file within 30 days after the AGM. Every company has to file. But there are 4 kinds of companies which have to do the filing in XBRL format, Extensible Business Reporting Language. Only these 4 companies. Which 4 companies? Number 1, listed companies and their Indian subsidiaries. Number 2, those companies with paid up share capital at least 5 crores. Number 3, those companies with turnover at least 100 crores. Then companies whose financial statements have to be as per Ind AS. Okay, so filing with ROC every company has to do. In XBRL only these 4 companies have to do. But however, if the company happens to be a banking company or an insurance company or a power sector company, nothing but electricity company, or NBFC or housing finance companies, for these companies XBRL will not apply. So these 5 companies, even if they fit under any of these criteria, still for these companies XBRL will not apply. Okay, now and one more thing, remember, if the company in one particular year, okay, files the financial statements in XBRL format, then forever that company has to continue to file in XBRL format only. Like for example, let's say in this year the company fulfilled any out of these criteria. Let's say this year turnover was at least 100 crores. So this company filed financial statements in XBRL format. Now next year, even if none of these criteria is fulfilled, still the company will have to continue to file in XBRL only. Okay. Now comes our next discussion about CSR. See, for CSR, which kind of companies are covered? Those companies where net worth is at least 500 crores or turnover is at least 1000 crores or net profit is at least 5 crores. Tell me again, net worth at least 500 crores or turnover double, turnover at least 1000 crores or net profit at least 5 crores. So out of the 3 criteria, any one out of these 3 criteria is fulfilled, CSR provisions will apply. Now see, the reason why I'm discussing this with you is I wanted to discuss a little more in detail about this net profit point. When you're considering net profit for this CSR checking, this net profit, you should take net profit before tax, okay, and it should also be before setting off of losses. And in case the net profit includes profits of overseas branches, you have to exclude that profit. And also if this net profit already includes dividend from those Indian companies which are complying with CSR, even that you have to exclude. So about net profit, 4 things you have to remember. Number 1, it should be net profit before tax, it should be net profit before setting off losses. Then number 3, from this net profit you have to exclude profits from foreign branches, and number 4, from this net profit you have to exclude the dividend from those Indian companies which have complied with CSR provisions. So 5 discussions I've had with you: small company, eligible public company, certification of annual return, filing financial statements with ROC in XBRL format, and CSR. Okay, now listen to my next point about internal audit. This concept of internal audit is applicable to which companies? See, internal audit is not applicable for every company. Number 1, it is applicable to all listed companies. Number 2, it is applicable to those unlisted public companies with paid up share capital at least 50 crores or turnover at least 200 crores or outstanding loans and borrowings from banks or public financial institutions at least 100 crores or outstanding deposits at least 25 crores. 4 criteria, any one criteria fulfilled, internal audit will be mandatory. Paid up share capital at least 50 crores, turnover at least 200 crores, outstanding loans and borrowings from banks and public financial institutions 100 crores, outstanding deposits 25 crores. Okay, see, but what if the company happens to be a private company? Then only these 2 points, guys. Either the turnover should be at least 200 crores or outstanding loans and borrowings from banks and public financial institutions should be at least 100 crores. Okay, so only for these companies internal audit is mandatory. And remember, can the statutory auditor of the company itself be the internal auditor also? No, the statutory auditor and the internal auditor have to be 2 separate people. Okay, and the internal auditor, it is not necessary that he must be a practicing chartered accountant. It is not necessary. Alright, then coming to one more limit over here regarding term of auditors. You have this concept in your auditors chapter that an individual can be appointed as an auditor for only 1 term of 5 years. A firm can be appointed as an auditor for maximum 2 terms of 5 years each. After this, there will be a cooling period of 5 years, right? But this concept is applicable not to every company. This concept is applicable only to these 4 companies. Number 1, all listed companies. Number 2, unlisted public companies where paid up share capital is at least 10 crores. Then those private companies where paid up share capital is at least 50 crores. Then those companies with borrowings from banks and financial institutions and public deposits at least 50 crores. See, I am hoping you are noticing that here I am not talking about only borrowings. I am talking about public deposits also. So public borrowings and public deposits means what? We've accepted deposits from the public. So borrowings plus public deposits should be at least 50 crores. So if your company comes under any of these 4 categories, then in these companies only that 5 years cooling period, that concept will apply. If the company does not come under any of these 4 criteria, then other companies, they can keep on reappointing the same auditor again and again. The cooling period concept will not apply. The cooling period concept will apply only in these 4 companies: listed companies, unlisted public companies with paid up share capital at least 10 crores, private companies with paid up share capital at least 50 crores, and those companies with borrowings and public deposits put together at least 50 crores. But remember, this concept will never apply to 1% companies and small companies. And lastly, just like how you have small companies under Companies Act, similarly under LLP Act we have small LLP. Okay, so small LLP is that LLP which has capital contribution up to 25 lakhs and turnover up to 40 lakhs. Capital contribution up to 25 lakhs and turnover up to 40 lakhs. Even in small company, we had the word and in between. Even in small LLP also we have the word and in between. So these are your 8 limits, guys. 8 very important limits. I've selected the important ones and that is what I've brought over here. Okay. Now listen to my next set of discussions. This is about ordinary resolutions. See, what are the places in your Companies Act where ordinary resolution is required? First of all, what do you mean by ordinary resolution? See, if the question asks you about ordinary resolution, don't write just simple majority. You have to give a technical answer. Ordinary resolution means you should say the number of votes in favor is more than the number of votes against. Okay. Now see, what if the number of votes in favor happens to be equal to the number of votes against? Then is ordinary resolution passed? No, this is a tie. When there is a tie, either the chairperson will cast his casting vote and he will break the tie. But if the chairperson is not using his casting vote, or if the AOA has not given the chairperson the power to put this casting vote, in that case, if our conclusion is that there is a tie, then ordinary resolution is not passed. Okay, so ordinary resolution means number of votes in favor should be more than the number of votes against. And when you're checking this, will you consider members who did not even come for the meeting? You will not consider the absent members. Will you consider those members who've come for the meeting but they are not voting? You will not count those members also. You will count only the number of votes in favor and number of votes against. Members who did not even come for the meeting, ignore. Members who came but did not vote, ignore. See how many votes are there. Number of votes in favor should be more than number of votes against. Then what is special resolution? Special resolution, don't write just a 3/4. Don't write just a 75%. Write technical answer again. Special resolution means the number of votes in favor should be at least 3 times the number of votes against. Understanding? The number of votes in favor should be at least. Are you noticing? Here I am talking about more than. Here more than or equal to. So number of votes in favor should be more than or equal to 3 times the number of votes against. Alright. Now see, there are 5 important situations where ordinary resolution is required. Number 1, when the company is issuing equity shares with differential voting rights. About this, there's one special point which you must be aware of. Number 1, if the company happens to be a listed company, then this ordinary resolution has to be passed by way of postal ballot. Okay, but if the company happens to be an unlisted company, this ordinary resolution has to be passed at the general meeting itself. So number 1, issue of equity shares with differential voting rights. Number 2, ESOPs. See, if ESOPs are being given by a private company, an ordinary resolution is enough. But if the same ESOPs are given by a public company, then special resolution will be required. Then, see, whenever the company's name is getting altered, generally special resolution is required. Alright. But however, under section 16, the company's name is similar or identical to the name of another company or to the name of another registered trademark. So in that case, the central government is directing the company to change its name within 3 months. So in those situations, a simple ordinary resolution only is required. If central government is directing the company to change the name under section 16, rectification of name what you call, their ordinary resolution only is required. But in all other cases, whenever we are changing the company's name, SR is required. Okay. Then to issue dividend, to declare final dividend, not interim dividend, I am talking about final dividend. For final dividend also, simple ordinary resolution only is required. And to appoint the auditor. See, to appoint the auditor, ordinary resolution is required. But to remove the auditor, special resolution is required. Okay. So these are your 5 special situations where an ordinary resolution is enough. Then comes our special resolution discussion. Any MOA alteration, any AOA alteration, SR is required. But however, in MOA, if you want to alter the capital clause, there a simple ordinary resolution only is enough. Then, to issue securities by way of private placement, here also SR is required. To issue preference shares, here also prior SR is required. And I told you already, to remove the auditor also SR is required. Okay. Now comes our next discussion regarding registers. See, here be careful. Some registers have to be preserved permanently. Some registers have to be preserved for 8 years, and there is one register which has to be preserved for 30 years also. I'll discuss them all one by one with you. Listen to me. See, our first point is about register of deposits. Listen carefully, okay. Once a company receives the deposit money from the depositor, from the date of receipt within 21 days, the company has to issue a deposit receipt to the depositor. Once a company issues deposit receipt to the depositor, within 7 days, the company has to make an entry in the deposit register. Now that deposit register has to be preserved for 8 years from the date of the last entry. 3 things I said. Okay, I'll draw the timeline for you over here. See, once a company receives the deposit money, from that date, within 21 days, the company has to issue the deposit receipt. Okay, once the company issues the deposit receipt, within 7 days, the company has to make an entry in the register. That register has to be preserved for 8 years. 8 years from the date of last entry. Okay, so this was about register of deposits. Then I have 2 points relating to charges. All the instruments creating or modifying charges, they have to be preserved for 8 years. 8 years from the date of satisfaction of charge. Okay, but the register of charges has to be preserved permanently. So register of deposits has to be preserved for 8 years from the date of last entry. Instrument creating modifying charge has to be preserved for 8 years. 8 years from satisfaction of charge, but register of charge has to be preserved permanently. Okay, then register of members has to be preserved permanently. Register of debenture holders has to be preserved for 8 years. But just remembering 8 years is not enough. 8 years from when? 8 years from the date of redemption. Okay. Then the minutes book has to be preserved permanently, and books of accounts and relevant vouchers have to be preserved for 8 years. Okay, so till here understood. Register of deposits. The deposits point I'll repeat once again. Once a company receives the deposit money, within 21 days the company has to issue deposit receipt to the depositor. Once the deposit receipt is issued, within the next 7 days an entry should be made in the register. That register has to be preserved by the company for at least 8 years from the date of the last entry. But charges register has to be preserved permanently. But in charges, the instruments creating or modifying charge, they have to be preserved for 8 years. But 8 years from when? 8 years from the date of satisfaction of charge. Then register of members permanently, register of debenture holders 8 years from the date of redemption, minutes book permanently, and books of accounts and relevant vouchers and all 8 years. Now see, I was telling you that there is one 30 years time limit also in your syllabus. I'll explain that to you over here. See, 30 years comes in your entire syllabus in 3 places. Number 1, if the company is maintaining books and records relating to share certificates, these books and records relating to share certificates have to be preserved for at least 30 years. But in case a dispute is going on, then it has to be preserved forever, permanently. Okay. Then number 2, when the company is issuing preference shares, okay, these preference shares generally have to be redeemed within 20 years, guys. But if the preference shares are being issued by the company, that is if the company is raising money for infrastructure projects, there the redemption period can go up to 30 years also. Similarly, whenever the company is raising money by issuing debentures, the debentures should be redeemed within 10 years. But however, if the company is raising money by issuing debentures for infrastructure projects, there also the redemption period can be up to 30 years. So 30 years time limit is in your syllabus only in 3 places. Number 1, all books and records relating to share certificate have to be preserved for 30 years, but if dispute is going on, it has to be preserved permanently. Then preference shares, generally they have to be redeemed within 20 years. But if the company is raising money for infrastructure projects, in those cases it can be redeemed up to 30 years. Then debentures generally have to be redeemed within 10 years. But same thing if the money is being raised for infrastructure projects, the redemption period can be even 30 years. So 30 years only in these 3 places. Okay. Then comes our next discussion about dates. See, there are 3 very important dates, alright, and the reason why I am discussing them with you is generally students mix them up. See, the deposit return, if the company has accepted deposits, the company has to file an audited deposit return with the ROC, audited deposit return. Okay, it has to be filed every year. Like for example, for financial year 24-25, it should be filed by 30th June of the next year. So next year would be 30th June 2025. So for a year, the deposit return should be filed by 30th June of the next year. Then see, our next point is deposit repayment reserve. First understand what happens over here. The company is supposed to go to a scheduled bank, okay, and open a separate bank account over there. The bank account will be called as a deposit repayment reserve account. Now in that account, the company is supposed to deposit at least 20% of the maturing deposits. This has to be done by 30th April of the financial year. So here the company is depositing money in a bank account, alright, separate bank account. Now comes debenture redemption investment. Here what the company will do is, the company will take money. How much money? 15% of the maturing debentures. And this much money the company will invest into specified deposits and specified investments. So in deposit repayment reserve, the money is being deposited in a separate bank account. In debenture redemption investment, in this concept, money is being invested in prescribed investments or in prescribed deposits. And even the percentages are different. For deposit repayment reserve, it is at least 20% of the maturing deposits. For debenture redemption investment, it is at least 15% of the maturing debentures. Okay, but for both, the time limit is the same, 30th April of the financial year. See, in debentures, you must have learned 10% also. This is for debenture redemption reserve. Alright, so even dates you've understood. Now listen, punishments. See, when it comes to punishments, I've just picked some 6 important punishments, guys. Just do these 6 at least, okay? 99% if you get a question from punishments, it will be from these 6 only. First of all, section 447 fraud. Now 447 fraud, whenever there is any fraud in your question paper, you can write about this punishment. Any fraud under Companies Act. The punishment will be imprisonment, minimum 6 months, maximum 10 years, and it's imprisonment and fine fine will be minimum the fraud amount and maximum 3 times of the fraud amount. Then in the charges chapter, if there is any violation, common penalty only, common punishment only, the company will be punished with 5 lakh rupees and officer in default with 50,000 rupees. Then if the company delays in filing annual return, see, annual return has to be filed within 60 days after the AGM. If there's any delay in filing the annual return, the company and officer in default will be punished with 10,000 rupees. And if there's a continuing failure, per day 100 rupees will be the fine, maximum for company 2 lakh rupees, maximum for officer in default 50,000 rupees. This is extremely important. For delay in filing annual return, company and officer in default 10,000 rupees. For continuing failure, 100 rupees per day and maximum 2 lakhs for company, maximum 50,000 for officer in default. Then when it comes to resignation of auditor, see, once the auditor resigns, he is supposed to file a statement with the company and with the ROC within 30 days. If the auditor does not do this, then the auditor will be punished. Fine will be 50,000 rupees or remuneration, whichever is lesser. And for the in case of continuing failure, 500 rupees per day, maximum 2 lakh rupees. Then comes your fifth point. Your fifth penalty is regarding dividend, extremely important. See, dividend penalty, annual return penalty, very, very important, okay. In case of dividend, once a company declares a dividend, within 30 days, the company is supposed to pay the dividend. Or within 30 days, the company is supposed to post the dividend warrant. See, when did the shareholder receive the dividend warrant? Doesn't matter. The company should have posted the dividend warrant within 30 days. Okay. Now, in case a company has declared the dividend, but the company has not paid the dividend within 30 days, or the company has declared the dividend, but the company has not posted the dividend warrant within 30 days, then punishment will come into the picture. Company will be punished with 18% per annum interest, okay, and the directors who are knowingly a party to the default, they will be punished with imprisonment and fine. Imprisonment will be maximum 2 years and fine will be minimum 1,000 rupees per day of default. There is something very unique, very special about this punishment, and that is there is no maximum limit over here. See, it's 1,000 rupees per day, but there is no maximum limit for this punishment, no maximum limit for this fine. Okay. So if the company does a default with respect to dividend, if the company does not pay the dividend within 30 days, the company will also be punished. The directors who are knowingly a party to the default, they will also be punished. For company, it is 18% per annum, and for directors it is imprisonment maximum 2 years and fine. Fine how much? Fine maximum 1,000 rupees per day of default, and there is no maximum limit. See, the same 18% interest will apply in the deposits chapter also. Like if the company does not repay the deposits on time, then whatever is the overdue period, for that also company will have to pay 18% per annum interest. So 18% per annum interest is there in two places. Number one, dividend, and number two, deposits. Easy to remember, D and D, deposits, dividend. In both of these places, the interest is 18%. Okay. Then one more penalty. This is from your LLP chapter. See, in an LLP, we know that there must be at least 2 partners. And out of the 2 partners, at least 2 individuals should be designated partners. And out of the designated partners, at least one of them should be a resident. Now, in case the number of designated partners is less than 2, or if none of the designated partners is a resident. So if there is any default in this part, either the number of designated partners is less than 2 or none of the designated partners is a resident, then there will be punishment. LLP and every partner will be punished with 10,000 rupees. In case of continuing failure, 100 rupees per day, maximum for LLP 1 lakh, maximum for partner 50,000. Okay, so these are your 6 important punishments. This at least you try seeing just before walking into the examination hall tomorrow. Let this be the last thing which you see just before you walk into the examination hall. Okay. Then comes our time limits discussion. See, I've brought over here some 11 time limits. Now, these are some extremely important time limits which can be tested either in your descriptive part or in your MCQs, especially case study based MCQs. The first one, we know that a public company should have minimum 7 members, a private company should have minimum 2 members. Now, if the number of members falls below this limit, then we give the company 6 months time to bring the number of members back to the minimum limit. If 6 months have lapsed and still the number of members is less than the minimum limit, then whoever are the members of the company, they will be jointly and severally liable for the debts of the company which are incurred after the 6 months period. So I want you to remember the 6 months period over here, that the company will be given 6 months time to bring the number of members back to the minimum limit. If the number of members even after 6 months is less than the minimum number, then whoever are the members of the company, they will be jointly and severally liable for the company's debts which are incurred after the 6 months period. Okay. Then number 2, if a new company is getting incorporated, the name has to be reserved. So that name reservation will be valid for 20 days. Similarly, if an existing company is getting its name changed, okay, even over there name reservation concept will apply. Their name reservation will be for 60 days. Then number 4, once the company prepares the prospectus, once it is approved, once it is signed by the directors and all, then it has to be filed with the ROC. Now once it is filed with the ROC, from that day, within 90 days itself, the prospectus has to be issued to the public. See, this 90 days is not minimum limit, it is maximum limit. I am saying that once a prospectus is filed with the ROC, from that day, within 90 days itself, it has to be issued to the public. So it has to be issued to the public within 90 days. Okay. Then number 5, regarding deposits, I have 2 important time limits, guys. See, in your deposits chapter, there are 2 important concepts. One is your exclusions from deposits, and the other is your tenure. 3 months, 6 months, 36 months, the tenure. Now in exclusions, there are 2 important exclusions. One is regarding convertible note and the other is regarding application money. Let me discuss both of them with you one by one over here. See, listen to me. Let's talk about the convertible note point. See, here there are some conditions. Condition number 1, the company is a private company which is recognized as a startup by DIPP. Okay. Now this company has issued to one person convertible note. Now against convertible note, this person is going to give money to the company. Now this money has to be minimum 25 lakh rupees, and this money should be given in one single tranche. Okay. And this convertible note means what? It means either it will be converted into equity shares or it will be repaid. So it is not compulsorily convertible. Either it will be converted into equity shares or it will be repaid within how much time? Within 10 years. Okay. So how many conditions you have? Condition number 1, the company is a private company which is recognized as a startup. Condition number 2, this company has issued a convertible note. Condition number 3, this convertible note will either be converted into equity shares or it will be repaid. Condition number 4, this conversion or repayment will happen within 10 years. And condition number 5, how much money? Money is minimum 25 lakhs against this convertible note, and this 25 lakh rupees has come in one single tranche. If all these 6 conditions are fulfilled, then this money which the company has raised against convertible note, this money will not be considered as deposits. This is your provision, guys. Now here I want you to remember this 10 years point. So I am targeting this 10 years point, that convertible note should either be converted into equity shares or it should be repaid within 10 years. Okay. Then similarly, there is one more exclusion in deposits relating to application money. See, I'll explain it to you over here. See, very simple point, okay. Once a company receives the share application money, within 60 days itself, the company should allot the securities. If the company is unable to allot within 60 days, then within the next 15 days, the company should refund the money back. Now, if the company does not refund within 15 days, then thereafter, so after 60 plus 15, after 75 days, after this only, it will now be considered as deposits. So, till this date, the money will not be considered as deposits. Only if the company does not refund within these 15 days also, only after that the money will be considered as deposits. So once a company receives the share application money, within 60 days the company should allot the securities. If the company doesn't allot within 60 days, company should refund within 15 days. If the company does not refund within 15 days also, thereafter we will start considering the money as deposits. Okay. Then I have 3 points relating to annual return for you. See, annual return has to be filed by the company within 60 days after the AGM. But annual return by a foreign company has to be filed within 60 days from the end of the financial year. See, be careful. A domestic company, an Indian company will be filing annual return within 60 days from the AGM. But a foreign company will be filing annual return within 60 days from the end of the financial year. Did you notice the difference? This is your foreign companies chapter point. This is your accounts of companies chapter point. So, Annual return generally has to be filed within 60 days after the AGM, but in a foreign company, the annual return has to be filed within 60 days after the end of the year. Even in LLP also, annual return has to be filed with ROC within 60 days from the end of the financial year. So in foreign company and in LLP, the concept is the same, that annual return has to be filed within 60 days from the end of the financial year. But I'll tell you, even in these 2 points also, there's a small difference. The difference is, if foreign company is filing the annual return, doesn't matter where is this foreign company's place of business in India, doesn't matter. They will file with ROC New Delhi only. Don't say Central Registration Center. Central Registration Center is only for FC1, not for everything else. For everything else, it is still ROC New Delhi only. So annual return of foreign company will be filed only with ROC New Delhi, but annual return of LLP will be filed with that ROC who has jurisdiction over the LLP. Okay, so understood the annual return? 3 points, guys. Company generally has to file within 60 days after the AGM. Foreign company will have to file annual return within 60 days after the end of the financial year. Even LLP also within 60 days after the end of the financial year. Now, foreign company will file the annual return with ROC New Delhi only. Okay. Then comes my next point. This is about financial statements. See, every company has to file financial statements with ROC within 30 days after the AGM. But if it's a foreign company, even foreign company has to file financial statements with ROC New Delhi, but that is within 6 months from the end of the financial year. So, domestic company, Indian company, normal provision is that the financial statements will be filed within 30 days after the AGM, but foreign company 6 months after the end of the financial year. Okay, then understood, right? Annual return and financial statements, these last 5 points very important, guys. Confusion is possible over here. Then see, there are 4 places in your Companies Act where we say that the shares have to be fully paid up. The precondition is that the shares have to be fully paid up. Number 1, redemption of preference shares. If the company wants to redeem preference shares, before redeeming the preference shares, the company has to ensure that the preference shares are fully paid up. Only then they can be redeemed. Then number 2, bonus shares, we know they are always going to be fully paid bonus shares only. They can't be partly paid shares. Then number 3, if the company wants to buy back securities, before buying back, the company has to ensure first that they are fully paid up, only then the company can buy back. And number 4, if the company wants to convert shares into stock, section 61, alteration of share capital, to convert shares into stock, only fully paid shares only can be converted into stock. So you have the fully paid precondition only in 4 places: redemption of preference shares, bonus shares, buyback of shares, and converting shares into stock. Okay. See, next we have some rates to remember, some very important rates. Listen to me carefully. First is regarding private placement. See, you know what is private placement, right? Here, the company is giving the offer to a selected group of persons, an identified group of persons. Now, once those persons give money to the company has to allot shares to them. So, company should allot shares to them within 60 days after receiving the money. If the company does not allot within 60 days, company has to refund the money back to those selected group of persons within 15 days. Now, if the company does not refund the money within 15 days also, then the company will have to pay 12% per annum interest. The special point is, this 12% per annum interest is not from the 75th day. This 12% per annum interest is from the expiry of the 60th day. Okay. So, in private placement, once a company receives the money, company should allot within 60 days. If company does not allot within 60 days, company should refund within the next 15 days. If the company does not refund within 15 days, now company will have to pay interest also. This interest will be at the rate of 12% per annum, but this 12% per annum interest will be from the expiry of the 60th day and not from the 75th day. Then comes your next point regarding share allotment. See, I'll explain this to you, simple point again. In section 39 basically, Section 39 says that if the company is unable to receive the minimum subscription, or if the company is unable to receive application money, then the company should refund the money back within 15 days after the closure of the issue. If the company does not refund within 15 days after the closure of issue, then the directors and officers in default will be jointly and severally liable. They will have to pay 15% per annum interest. Who will have to pay? Directors and officers in default. They will be jointly and severally liable. So this is regarding section 39. if the company does not receive minimum subscription or share application money, then the company will have to refund the money back within 15 days after the closure of the issue. If the company does not refund, then 15% per annum interest will apply. Then with respect to deposits, I just told you, for deposits and for dividend, in both the places you have 18% interest. Deposits interest is nothing but, see, if the company does not repay the deposits on time, for the overdue period 18% per annum interest has to be paid. For dividend, there are two rates, okay. 18% I just spoke to you about just now only, in case a company does not pay the dividend within 30 days after declaring, or if the company does not post the dividend period, does not post a dividend warrant within 30 days, then a company will have to pay 18% per annum interest. This you know already. What is this 12% point? Let me tell you. In dividends, you have this unpaid dividend account concept, right? See, once the company declares dividend, within 30 days the company should pay the dividend. But company is ready to pay the dividend, but the other party, the shareholder, has not come to collect the dividend. So in that case, once 30 days are over, within the next 7 days, the company will transfer the unpaid dividend to unpaid dividend account. Right. Now, if the company does not transfer the dividend to unpaid dividend account on time, then for the delay period, the company will have to pay 12% per annum interest. Okay. Then we have a point regarding underwriting commission. See, maximum how much underwriting commission can the company pay? With respect to shares, maximum 5% of issue price or whatever is the AOA rate, whichever is lesser. And for debentures, 2.5% of issue price or the AOA rate, whichever is lesser. Shares 5%, debentures 2.5%. Not 5%, 2.5% of face value. No, it is 5%, 2.5% of the issue price or AOA rate, whichever is lesser. Okay. And last percentage, when the company is issuing equity shares with differential voting rights, those shares can enjoy maximum how much total voting power? Equity shares with differential voting right can enjoy maximum 74% of total voting power. So these were 6 extremely important rates that you should remember, especially the first 4. Lastly, we have 3 fractions which we have to remember from a management and administration chapter. Point number 1, who can demand a poll? Members plus proxies put together. Yes, even proxies can demand a poll. See, can proxies vote on show of hands? No. Can proxies vote on a poll? Yes. Can proxies demand a poll? Yes. Will proxies be counted in quorum? No. Okay. So, number 1, demand of poll, members plus proxies put together holding at least 1/10 of total voting power or at least 5 lakhs paid up share capital. This many members plus proxies can demand a poll. So, either the poll will be announced either because the chairperson has decided on his own or because so many members plus proxies have demanded. Okay. If poll is demanded, poll has to be taken up within 48 hours. But there are 2 cases where poll has to be taken up immediately. Number 1, for adjournment of the meeting, and number 2, for appointment of chairperson. For these 2 reasons, the poll has to be taken up immediately. All other cases, poll can be taken up within 48 hours. Then comes the next point about resolutions requiring special notice. Section 115, guys. So under section 115, resolution requiring special notice, the special notice has to be submitted by how many members? It has to be submitted by members put together holding at least 1% of total voting power or at least 5 lakh rupees paid up share capital. You understood why I've brought this point. Here also you have 5 lakh rupees paid up share capital. Here also 5 lakh rupees paid up share capital. But are you noticing this point is different? Here it is 1/10 of total voting power, which means 10% of total voting power, and here it is 1% of total voting power. The difference is there. Okay. Number 3, we have a common point for section 111, circulation of members resolution and EGM. See, in section 111, the members can request circulation of a certain statement. Then in section 100, the members can also request for an EGM. So for both of these points, how many members should be taking the initiative? Members put together who are holding at least 1/10 of paid up share capital. Here we don't have the 5 lakh number. Okay. So 3 fractions, demand of poll, members plus proxies put together holding at least 1/10 of total voting power or at least 5 lakhs paid up share capital. Resolution requiring special notice, the special notice should be submitted by members holding at least 1% of total voting power or at least 5 lakh paid up share capital. Then for circulation of members resolution and for EGM requisition, the requisition has to be submitted by members put together holding at least 1/10 of paid up share capital. Alright guys, so these were all the last minute reminders I wanted to share with you all. I'm hoping you've benefited in some form or the other through this video. So I'll close this video over here guys. You go out there the remaining time, do your best and then go rock your examination tomorrow. All the best, bye bye.